What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be looking at the most overvalued stock that I think I've ever seen. And that stock is ticker ASTS, which is, as it says here, is engaged in building a broadband cellular network in space to operate directly with standard unmodified mobile devices based on an extensive IP and patent portfolio, which sounds very interesting, right? Very interesting. Now, the past year, the stock has gone up immensely from $2 a share all the way up to now $33 a share, which means the market cap on this company right here, it says 9.6, but back on Qualtrim, it says 10.5. Let's see what does Yahoo have it at? So Yahoo has the market cap at 10.5. So let's say whatever, roughly $10 billion for this company, okay? And if we look at the company's financials here, we can see that the revenue has been all over the place. 2018, they only had $350,000 of revenue. And then in 2022, it did go all the way up to 13.8 million, which is pretty interesting considering that jump is insane. But then it went down to zero. And then last year, it went down to roughly $4 million. So just think about that. We're not even talking about profit. We're just talking about sales, revenue of $4 million. The company's valued at $10 billion. That's insane. Net income has only been getting worse. Last year, they lost $300 million. So just think about that. You're selling something that loses $300 million in a year, and you're going to pay $10 billion for that. It doesn't really make much sense. So let's look at since there's not really a price to earnings, as you can see here, the price to earnings is pretty much just negative because the income is negative. The price to sales is 2,300, right? It's over 2,300 times sales. So, as far as I'm concerned, I remember back in the day, Shopify was valued at like over 1,000 times earnings, thousand times over 1,000 times EPS or net income. This is over 2,000 times sales. This is just revenue, top line revenue. So it's absolutely insane that we're sitting at this valuation. How much cash do they have? They have a little bit over 500 million in cash. So that's something, I guess. But compared to over $10 billion, it's really nothing. So this is probably by far the most overvalued stock I've ever seen. Not that the business model doesn't sound interesting because it does, but that's not enough to just make a sky high valuation. So, to be honest, the stock's been going up for almost a year straight, right? And it did kind of flatline in this period, but still, it's been in an upward trajectory. So, in terms of, what way you're going to bet against this, I don't see how anybody is buying this. And I can tell you right now, this is going to have a very hard fall. Like we're talking possibly a 90% fall. I would not be surprised if this stock went back down to $3 or $4 a share. I think that's actually realistic. I think that's pretty realistic. Doesn't mean it's going to happen anytime soon. Could take a couple months, could take a year, who knows? But I would say, yeah, maybe this lasts for a couple more months at best, and then it's going to start falling, I think. And again, I think it's going to fall really hard. It's not going to be just a 10 or 20% move. I think it's going to drop at least, 60, 70%, something like that. And the company maybe deserves to be trading at a $1 billion market cap, something like that, if you want to take a bet on it. But it's just insane that this is an actual valuation, especially considering the fact that the last couple of weeks the market has been pushing all these stocks down and the index is down over 10%, I believe. So it's kind of crazy that this stock has been doing this. But that is my analysis for this ASTS. I cannot imagine anybody actually investing into this company right now. But yes, it is going to have a very hard fall.